Yeah, very good morning. Welcome to Business Live with me, Darren McCaffrey. We're going to start with water because a major shake-up of Britain's water system has been launched, with a new commission set to investigate the UK's troubled water industry. After years of underinvestment and pollution scandals, the government says it will aim to strengthen regulation and boost investment. It comes as the UK's biggest water company, Thames Water, is trying to avoid collapse after warning it could run out of cash. We'll speak to John Phillips. He's the Chief Executive at the Global Infrastructure Investment Association and joins us this morning. Very good morning to you, John. Just first of all, do you welcome this report, if you like? Do you welcome the fact that the government are looking at an industry that, frankly, is in a bit of a mess?
Yes, we absolutely do welcome the report. We think that the Secretary of State has moved swiftly to try and start the process of getting a better handle on where the water sector is. I think none of the parties involved in the water sector, from investors through to operating companies through to environmental campaigners and customers, nobody's really happy with where the sector is right now, and I think it's a great move to kick off a fundamental review and hopefully a reset of the sector.
You say a reset. There's lots of suggestions this morning that Ofwat itself could be scrapped entirely. Again, is that something that you would like to see, that the regulator, in essence, needs to fundamentally change?
Well, listen, I think we absolutely think that the regulator needs to change its approach and to prioritise the investment and unlocking that investment that is so necessary to actually get the sector back onto its feet. So we do think the regulator needs to change its approach. We're certainly not calling for the abolition of the regulator. But what we do fundamentally think needs to be a part of the review is whether or not the arrangements that involve the different regulators. We have the Ofwat, we have the Environment Agency, we have the Drinking Water Inspectorate. That it's a complex sort of landscape. Really hard for people to understand and to see how different regulators' requirements come together in some kind of joined up long-term plan, and that's what's been sadly lacking. So we certainly look for greater alignment and coordination between the regulators.
The big question is, the water industry is taking a hell of a hammering over the last couple of years, whether it's on things like sewage and water, whether it's on seemingly increasing bills, a lack of investment, a lack of long-term strategy, as you talk about, and now potentially hit to profits as well. Why would anyone be willing to invest in this sector, given that reputation and given the real uncertainty in the years to come?
Well, I think it's a great question, and it's the question that absolutely needs to be solved by this review. We have a situation where there has been underinvestment, but we have to look to the regulator as being part of its statutory responsibilities is to set out a long-term plan and unlock the investment necessary to achieve that plan. We've had very little focus from the previous government on such a long-term plan, and a real prioritisation on driving bills down as opposed to looking long-term about the investment that's needed. And that's what fundamentally needs to change. And we measure our members' sentiment to the UK as we do all of the other markets. And I can tell you that the last time we did that test, which was earlier this year, the UK was at an all-time low. People and investors really concerned about political instability and regulation. Now, Labour's come in. I think it's got off to a good start by and large, some very constructive early steps. And of course, with the majority that they have, then hopefully political instability is, for the near term at least, under control. But now we must look at regulation.
Yeah, and unlike in the railways, for example, it's pretty clear the government are trying to avoid any form of nationalisation when it comes to water. But you look at the state of Thames Water, for example, and indeed other companies are run. Are you concerned fundamentally that actually there may not be any private investment in the years to come, that effectively it could, don't mind the pun here, that it could all dry up?
Look, I try to be optimistic, and I think that there are many fundamentals about the UK investment environment that should be attractive. It's not my role to talk down the UK at all. The UK is an important market, and investors, I think, will look for opportunities going forward. But there is a correlation between investors that have been exposed to the water sector and feel that they have not had the regulatory environment that they expected, and returns have been, very, very poor by international standards. Now, that's what needs to change. The Labour government has put private investment at the heart of its economic growth strategy. That's very much welcomed. And now we need to see, piece by piece, the investment landscape coming together in a coordinated way so that the UK returns to somewhere near the top of the international markets, as opposed to languishing pretty well at the bottom.
OK, really fascinating stuff. And of course, John, we're expecting those decisions on price increases from Ofwat to come a little later on in the year. We'll have to see how the investment goes as well. John Phillips there, the Chief Executive at the Global Infrastructure Investment Association, joining us down the line from the city. Thank you, John. Let's bring you up to date with the rest of today's news now. And nearly half a million workers on the so-called real living wage are set for a pay rise. The rate will go up from to £12.60, up by 60p an hour across the UK, 70 pence in London to £13.85. According to the Living Wage Foundation, a full-time worker earning the voluntary real living wage will earn £2,262 a year, more than a worker on the current government minimum wage. Lloyds Banking Group says it's seen signs of improved financial confidence among consumers. This morning it reported a pre-tax profit of £1.8 billion between July and September, around 2% lower than this time last year, but ahead of analysts' expectations. Now, shares in McDonald's fell in extended hours trading last night as its quarter-pounder hamburgers were linked to a fatal outbreak of E. coli. One person has died in the United States, and at least 49 people have been taken ill. McDonald's officials suspect that some illnesses stemmed from contaminated onions. Rachel Reeves is considering whether to raise taxes on Amazon in a bid to support Britain's ailing high streets. The Chancellor is reportedly considering rebalancing the business rates Amazon pay on the warehouses with those by high street shops. The plan would be consistent with Labour's manifesto pledge to level the playing field between the high street and online giants. And don't forget, you can get more on that and much more on our Money blog. Just scan the QR code on your screen now for all the latest money stories. Now, Heathrow says it expects a record number of passengers this year. Some 83.8 million people are expected to pass through the airport. It comes as the UK's biggest airport reported its first profit since COVID. For the 9 months to September, it made a pre-tax profit of £350 million. That compares with a loss of £90 million in the same period last year. Let's speak to Sally Ding. She's Heathrow's Chief Financial Officer and joins us from the airport itself. Very good morning to you, Sally. A lot of kind of unique events this year. We teased it at the start of the programme. Taylor Swift helped boost passenger numbers. The Olympic Games in Paris too. Is that what's driven these really strong passenger numbers this year?
Yes, it was one of the reasons, and we're really great to see a record-breaking summer passenger going through Heathrow, and we have had a strong operational performance. Really glad to see the passengers enjoy their journey.
In saying that, I'm trying to, in some ways, Sally, ask, is this an exceptional year? Is the expectation that these numbers will remain strong when you take away things like Taylor Swift isn't going to be playing concerts in lots of parts of Europe next summer? The Olympics clearly aren't going to be in Paris. Are you still expecting strong passenger growth in the months and year ahead?
We do, and we do expect the demand remains strong. Yes, there will no Taylor Swift concerts or the Olympics next year, but there will be something else happening. This is showing the UK's attractiveness to the passengers around the world. What we would like to make sure is to remain focused to running the operation and keep investing in the facilities we have here to facilitate a great experience for our passengers.
And you talk about that experience, you know, all airports experience problems, of course they do, but there has also been concern amongst the airlines and amongst passengers themselves about the fees effectively that Heathrow charge. Do you feel that, given the fact that passenger numbers are increasing, that those fees have been somewhat mitigated from a kind of budgetary point of view?
CAA set the fees for us, and we have operating that. What we are focusing on is how to make the facilities, make the passengers' experience at Heathrow as a great experience, and what we need to do to make the airport as an efficient airport. Obviously, it's a great value of Heathrow to the passenger and for the airlines. We have seen increasing demand from the airlines to come to operate or expanding their business at Heathrow. We will work with the airlines and our stakeholders to make sure to keep that investment. We're investing over £1 billion alone in 2024, and that investment will continue to make sure we give the passengers great experience at Heathrow.
Now, one of the concerns that you have raised is around this issue of essentially having to pay for a visa if you're a transit passenger, if you come from certain parts of the world. I assume you're lobbying hard for the government to get rid of that, given the fact that Heathrow is a major international hub. Any sign that this new Labour government may well look at that again?
I can't speculate on the policy decision. What we are asking the government is to look at those policies affecting aviation in a joint-up way that makes sure the policy setup is to increase the competitiveness of the UK and also the Heathrow as the UK's only hub airport rather than the other way around. In relation to the ETA, we have seen some negative impact already in the transit passengers. And when this policy to be expanded to a much bigger cohort, particularly for North American passengers from January next year, we would see much bigger impact on the transit passengers, given that the passengers would need to come to pay for it. And Heathrow is one of the biggest transfer hub for global passengers, so we are asking the government to rethink about that policy for the transit passenger only.
And Sally, we can have anyone on from Heathrow, and this has probably been true of every single interview for the last 30 years, and not talk about the third runway. What is happening with the possibility of a third runway at Heathrow?
Yeah, increasing capacity at Heathrow is extremely important for the UK economic growth, and we are working hard on that to review that plan internally. And we would would like to make sure that plan is actually aligned with the government's forecast and make sure we help the UK to grow the economy.
You said that, sorry, I'm just going to pick on that. What I'm trying to ask you, can you increase capacity? You've managed to do it a little bit so far. Can you do it further, even if there isn't a decision, or the decision on the third runway doesn't go your way?
Well, while we're working on the expansion plan, as I said, it's a critical decision. We want to make sure that's right and fit for the future. In the short term, we're also looking at unlocking the capacity by better and more efficient utilizing of the existing assets within the current footprint through different passenger process. For example, we're investing £1 billion on upgrading our security scanners, and hopefully many passengers have seen them live in the terminals. And also we invest in the T2 baggage system. All of those will help to increase the capacity in the short term and give passenger better journey. Indeed,
Sally, I'm all in favour of those scanners where you don't have to take out your iPads and liquids, so more of those, please. Thank you very much indeed, Sally Tink there, who's the Chief Financial Officer of Heathrow, joining us from the airport. We're going to take a quick break on Business Live. Coming up in just a couple of minutes with the latest on the markets today. The FTSE down a little this morning. We'll be looking at that and the rest of the financial news in just a couple of minutes. Stay tuned.
This nation under God shall have a new birth of freedom.
A date which will live in infamy.
A short time ago, an American airplane dropped one bomb. We choose to go to the moon in this decade and do the other things. Not because they are easy, but because they are hard.
Well, I'm not a crook.
Mr. Gorbachev, tear down this wall.
Today, our very freedom came under attack.
We are the change that we seek.
It's been the honor of my life to serve as your president. I love my country more.
We're going to make America great again.
While I may be the first woman in this office, I will not be the last.
There's been 46 presidents of the United States. Who will be next in the White House? Get the full story first on Sky News.
I saw police being forceful, pushing young men and women to the ground as they made almost 100 arrests. Will the cold affect your voters?
Well, we have a lot of tremendous support.
Free, wherever you get your news.
The people here know that worse storms may well be on their way.
I'm Martha Kellner and I'm Sky's US correspondent based here in Los Angeles.
I say, bring it on.
With America divided and tensions running high, get ready for an election like no other.
Join our teams as we follow the campaign trail as America decides.
We will win, win, win.
Get closer to the action this US election with full reaction and analysis.
Sky News, the full story first.
Emirates premium economy. Maybe one day all airlines will have seats like this. Fly Emirates, fly better. Thank you.
OK, let's have a look at the markets this morning. And the Asia-Pacific indices mostly rose last night, breaking ranks with major Wall Street benchmarks. The Japanese subway operator, Tokyo Metro's stellar market debut boosted investor optimism. Meanwhile, here in Europe, markets are trading flat as investors focus on the corporate reports and US Treasury yields. There are earnings aplenty on the continent, with Deutsche Bank beating expectations in its return to profits in the 3 months to September. And here the FTSE is down just over 0.4%, as you can see. Leading the pack today is the advertising giant WPP, after they reported a 4.1% increase in like-for-like revenue for the quarter ending until September 30th, despite witnessing a slump in business outside the US and Europe. On the currencies, the pound is currently down just a little against the dollar. It's been doing quite well over the last day or so, up a fraction against the euro at €1.20. And finally, the price of oil is down this morning around 1.25%. A barrel of Brent crude is $74 a barrel. OK, let's bring in Emma Wall. She is Head of Investments Research and Analyst at Hargreaves Lansdown. Emma, good morning to you. Let's start with some good news, if we can. Good news for Rachel Reeves and the UK economy. The IMF upgrading growth forecasts yesterday.
Yes, as you say, good news for the UK. So the IMF has re-examined its expectations for growth for the G7 countries for 2024. So bad news for Japan and Germany, who had their growth forecasts downgraded for this year. But UK saw its growth forecasts more than double. So 6 months ago, the IMF was expecting the economy to grow by 0.5% in 2024, and now they've upgraded that to 1.1%. However, I think the really interesting thing about what they said was not necessarily the number, but the narrative around the number, because there was a heavy caveat involved in this growth forecast, because it was based on the assumption of continuing falling interest rates, which means you've got to see the Bank of England continue to cut, which is not necessarily guaranteed. And here's the real kicker, I think. It's also based on the growth forecasts from the Tory government policies, because, of course, we haven't had the current government policies yet. We're waiting till next week to have those. So there's a lot of caution around this number because it's based on, well, facts that may no longer be true. And the budget next week will really reveal as to whether that growth figure is actually achievable or whether there will be policies next week that could boost growth further or indeed hamper growth.
Yeah, indeed, it was fascinating. The IMF's essentially suggesting don't do anything too extreme either way because it might put it into jeopardy. Let's talk about the US economy, which clearly done kind of gangbusters over the last couple of years, but bond yields are rising. And there's this expectation now, isn't there, really, that Donald Trump is more likely than not to become the next US president?
Yeah, we were all very excited around the desk over the last 24 hours because bond yields are sort of moving in the complete opposite direction of what you'd expect them to be doing, given that the Fed cut interest rates quite heavily last month. You know, so they're back actually on both sides of the pond, plus 4% for the 10-year. You know, we're back to levels we haven't seen since the beginning of the summer. And both central banks have cut since then. So it's really interesting. And you're quite right. What's being priced in is actually the fact that Donald Trump is ahead in the polls. Now, again, it's not the polls absolutely themselves, because there's only 1 or 2 points in it, actually, in terms of his lead. It's more the trajectory. So a couple of months ago, after she announced that she'd be running for president, Kamala was way ahead in the polls, Kamala Harris. But actually the trajectory now is moving towards Trump. And the type of president that Trump will be is very much spend, spend, spend. So then you think about the expectation of what that does to the US deficit. And that's why you saw bond yields spike considerably yesterday and into today, above 4%, as I say, for the 10-year on both sides of the pond. Interestingly, the other asset class that you've seen rise, I mean, over 40% year to date, but continue to rise, reach fresh new record highs, is gold. And that's the other expectation of a Trump presidency, of what it may do to geopolitical risks. His foreign policy last time around was, as I'm sure you remember, rather antagonistic when it came to certain key global players. He has indicated potentially that he'll remove support from Ukraine, for example. His views on the Middle East are not necessarily well known, his allegiance with Putin. So then you've seen the expectation of Donald Trump going back into the White House, this bond yields go up because of the expectation, the deficit going up, and gold going up on the expectation that geopolitical risk has risen.
And just very finally and quickly for me, Emma, just banking, Lloyd's profit down a little this morning, but seeming quite optimistic about the future.
Yeah, we're cautiously optimistic on the banking sector. The cost of living crisis hasn't led to as many loan defaults as might have been expected. And mortgage books still look pretty good because interest rates do remain high. So cautiously optimistic. Lloyd's today and NatWest and Barclays to follow this week.
OK, Emma, really appreciate that this morning. That's Emma Wall, Head of Investment Research and Analyst at Hargreaves Lansdown, with the latest on the markets. Thank you. We're just going to bring you some breaking news here on Sky News. And that regards Lord Ali. You may remember him. Of course, he's a Labour peer, being a donor to the Labour Party, was involved in that kind of scandal, if you like, when it comes to donations to Keir Starmer and other senior Labour politicians. Well, we've had a report from the Lords Commissioner, and he has found that he committed 4 breaches of standard rules in the way that he registered his interests. We know that people have been calling for an investigation. Well, that Lords Commissioner has looked into it, and Lord Ali has been found to have broken 4 rules in the way that he registered his interests. This is a separate issue, of course, from the way that he donated to the Prime Minister and indeed others. This is about how he registered his interests. And as I say, in the last couple of minutes, the Lords Commissioner confirming that he's committed 4 breaches. And we'll have more, of course, on that throughout the day on Sky. Indeed, I'm sure it may well come up in Deputy Prime Minister's Question Time, which is up next on Sky. Keir Starmer, of course, off to Cheltenham. Angela Rayner standing in. Stay tuned for that on Sky and back at 4:30 this afternoon.